Test, test, test. Mic check. Still wasn't enough. All right, 12 o'clock. Get started in about 20 seconds or so. All right, let's do it. It's time for my Tuesday weekly update on all things markets. Today is December 15th. Quick disclosure, I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. These are the positions that I am currently involved in as I'm speaking. Most of these positions are to the long side, a couple shorts. Happy to get into some of these positions in a little bit more detail and talk about the market in just a minute here. Short story about my background. I've been involved trading professionally really since 2008. I joined T3 in 2010. I've been a licensed individual at T3 Trading Group, a professional trader at the firm since 2011. I've been running a trading desk for the firm since 2013, so the last 7 years. I've worked with and mentored well over 100 professional traders, currently managing a group in excess of 50. reporting to you. I'm back in Tahoe. If people have been following me, throughout the year, I've been all over the country this year. It's been a great experience. I apologize I had to miss last week's webinar. I had a personal family issue that I had to deal with that had me away from the markets for about a week and a half. But as of yesterday, I am back into it, full-time trading, and happy to be back at it. So today I'm going to be talking about all things markets. I'm going to be talking about T3 Trading Group. I'm going to be talking a little bit about T3 Live, but primarily I'm going to be focusing about T3 Trading Group, which is the FINRA registered broker-dealer. We engage in professional proprietary trading, and we engage in retail trading accounts. But first, let's talk about markets. So as we're talking right now, market is honestly having a very boring day. The S&P is up 0.7%, the Qs are up 0.35%, and the IWM is up 1.3%. So we're seeing relative strength in the IWM again. This is just a 5-minute chart. We can take a look at the daily chart of the IWM here has been beautiful. This is a further continuation of the important theme that we've been seeing over the course of the last couple of months, which is rotation into value, rotation into mid caps and small caps. And it's really represented by how this IWM has had this massive breakout and has shown relative strength to the Qs and to big tech, which has been honestly our leader for the last 10 years. So again, further continuation of that. There's a lot of speculation on how long this could last. It could definitely last a while. It could definitely last a while. At the same time, while there is a cap on interest rates, that will inherently create an underlying bid beneath tech. So tech is something that we're going to continue to watch. Obviously, our big tech names, our FANG names, they've been very out of play. They've been very out of play for the last 4 months now. I can't remember the last time I saw Apple, which is maybe breaking out today, but Apple, Microsoft, Amazon. These charts are so boring right now. There's just been nothing going on in these stocks for the last several months, whereas we've seen some of these other names moving 100%, 200%, 400% over the course of a couple of weeks. And I know I was just talking to you guys about this pretty recently, but you have Palantir went on this run in November from $10 to $34. You've got all these Chinese car manufacturing companies. This XPEV in November went on a run from 22 to 74. Just incredible movements, and it's really one stock after the next. You can look at Plug, you can look at Fuel Cell. Someone just brought to my attention this morning this Laser. I can't even see the top of the chart. Laser, L-A-Z-R, here on November 20th or so was like a $10 stock, a $10, $11 stock, and then it hit a high of 47 last week, 47.80. It's just incredible moves from individual names. There's been a lot of arguments and chatter about bubbles here and bubbles there. And you know what? There might be little bubbles going on in some of these individual names that maybe don't deserve the moves that they've had. But the market itself, overall, the technicals here, even though our sentiment indicators are indicating that we might be a little bit overcooked to the upside, the technicals here overall have been very bullish. I'm telling my team of professional traders that I work with every day in our morning meeting, err to the side of the long side. You need to err to the side of the long side rather than the short side. The short trade has been very difficult. The long trade has been much easier to make money in. One thing worth noting potentially was yesterday. Yesterday we had a solid gap up in the morning, probably about 0.7% to 1% depending upon the index that you're looking at. And the S&P actually closed negative. What makes that significant is that it is a potential lower high versus this all-time high that we put in on December 9th. So 3 trading sessions later, another higher low, right? This from Friday, the low here is 363.26. Another higher low in the uptrend that has been ongoing since the election, but now a potential lower high. Will this lead to the break of Friday's low? If we break Friday's low, over the course of the next handful of trading sessions, well, then we would have lower highs and lower lows on a very small time frame for the first time in a while. So right now, the important spots I'm paying attention to in the SPYs are yesterday's high, Monday's high, which is 369.80. We get above and hold above 369.80, 370 in the SPYs. Any potential of there being a lower high is out the window. Our uptrend is continuing, and you need to err on the side of being long. If this is a lower high, and right now we're having a very tight inside day today, and it leads to some sort of breakdown where we break below Friday's low, well, then maybe we can actually put our short hats on a little bit and put some short trades on. It would not be unreasonable to me to see a market correction down to 350, just technically speaking in the SPYs from where we've come from. With that said, though, that's just one small technical thing to note amongst everything else that's been bullish, right? The SPYs here have completely broken out of the range that they were in for September and October, giving continuation through November, giving continuation in December, being led by value, being led by hated stocks. XLE has had this incredible move over the course of November. I can't remember the last time I've ever had anything positive to say about energy names. They seem to have just been trending down forever, as if oil was going to zero. I say that as a half joke because you may remember back, I believe in March, when we had the actual crisis ongoing, that oil actually went negative in that period of time, which was incredible because of the futures contracts. With the XLE has been looking incredibly bullish, is in a pattern of higher highs and higher lows. The XLF has been performing really well. These both took a little bit of a hit yesterday along with the market. Again, yesterday, like I was just saying when we talked about the SPYs, it's a day to take notice of. Is it meaningful? Maybe. We'll see. We'll see if we're able to break that low and go into lower highs and lower lows. These negative Maribozus that you see here, like in the XLF, it's something to take notice of. Maybe what's going on in the XLE and the XLF is starting to change. And maybe if that happens, we can start to see big tech wake up again, which would be interesting because it's been doing nothing. So I've got big tech on the radar. Some of the guys on my team did really well with Apple this morning, buying it pretty early off the open. I do have a long position in Apple, but I did not add today, so I was not involved in that. So Apple woke up a little bit this morning. But the other names here in big tech, Amazon, this is a sloppy looking chart. There's nothing to talk about here. Facebook, this is a sloppy looking chart. Potentially even having could break down if it gets below this 264. So all stuff that we're paying attention to. There's been great day trading opportunity in some of these, what I call crazy stocks. But outside of that, I told everybody in the morning meeting today, I think today's less is more. Less is more approach for today's trading session. And by the way, that is one of my huge themes that I emphasize to people for successful trading. Not every trading session is created equal. Not every day is a barn buster day where you should be going all in and being extremely aggressive. As a matter of fact, the days where you should be all in and extremely aggressive are probably minority days. And one of the things that you want to be doing in your morning research on a day-to-day basis, that I do in my morning research on a day-by-day basis, and I share that research with my team every day in our morning meeting, is you want to be assessing, do I really have an edge here based on how the market is set to open? What does today's gap mean to me? Are we gapping up? Are we gapping down? Is that gap breeding opportunity? What type of gap is it? What are the big picture technicals of the market telling me? And then you come up with a game plan for yourself. I should be aggressive today for the following reasons, or the opposite. And today and yesterday, honestly, I came in yesterday, the market was gapping up 0.7%. I didn't want to chase that right into this, potential resistance up in this 370 area. I told everybody yesterday morning, and I repeated it again this morning. You know what? I think right now less is more. Err to the side of being to the long side because that's what our technicals are telling us. But right now, we don't have a strong advantage based on how we're gapping. And guess what? That's the key to the business, or one of the keys to the business. When there's a ton of opportunity, you need to be aggressive. You need to trade very actively. When there's not a lot of opportunity, you need to know to sit on your hands. Because if you treat every day the same, then you're going to not be as aggressive and active as you need to be to capture the opportunity when it's there. And you're going to do damage to yourself on a day, honestly, like today. Look at the SPYs here today, how tight this inside day is. Tell me where the edge is in trading the SPYs themselves today. Now, this is one of the benefits of being an equities trader, is even though the SPYs are out of play, I can find individual equities that I can focus on to make money for myself. Again, Apple off the open, one of the best trades for my team. Some of these guys, we talked about in the morning meeting, the triangles that have formed, basically an XPEV and LI, and I see that they're rolling over here in the afternoon, but these gave great opening trades for that upside continuation. So there were individual names that you could focus on to make money, but as far as the market itself, less is more. The only other thing I really want to talk about today is something that's completely outrageous to me, and I've been talking about it and probably whining a little bit about it for years now, is these IPOs. We had two very big IPOs last week. Airbnb, which I do have a position in right now. I am long Airbnb. And DoorDash. DoorDash I actually had a short position on, but I'm now out of it. Airbnb, we can focus on this one, but they're both basically the same. They priced the IPO at $68. But where did the thing actually open up for trading on that day? It opened up for trading at about 146. Over 100% premium to the IPO price. And here's where my huge pet peeve comes in. If you watch CNBC, which I really don't anymore, when the office is open, we have it on the TVs in the office, but now that the office has been closed, I get zero value out of CNBC unless they are having an important guest on, maybe like a Jeffrey Gundlach or something like that. I always want to hear what he has to say. But if you are watching anything in the media, they're talking about how this IPO is so successful. First day, it's up over 100%. But who is that actually being successful for? The only people that are doing well, it's not good for the company. It's not good for Airbnb because they did a traditional IPO. They raised money at $68 per share when they could have been able to raise money at $145 a share. So Airbnb gets ripped off. Now let's say that you're a regular person. You're just a regular investor, a regular trader. Maybe you go on vacation and you use Airbnb for your trips. I've actually been living in Airbnbs basically all year in different parts in the country. I actually love this company. But let's say you're just a regular investor and man, I love this Airbnb. I think it's a great company. It's something I really want to invest in. Well, where is, unless you're a big client of the investment banks and you're actually able to get stock at the IPO price, which by the way, you have to be a huge client of the investment banks in order to get that. If you're kind of just a little bit more of a regular type person, they really don't help you out with that. If you're just a regular person, you're buying this thing at 145 at the open. And you know what? It's just not fair. It's not right. Because you have these people who are making over 100% basically overnight with very little risk. And then you have everyone else who becomes the bag holder at 145. And then CNBC touts it as a super, extremely successful IPO. But what has the stock actually done since the IPO? There was an initial pop for 5 minutes basically when it opened. And it has only gone down since then. So, you know what, if you're a huge client of an investment bank, congratulations. They hooked you up and you made over 100% basically overnight. But if you are anyone else, from the company itself to a regular mom and pop investor, they are screwing you over. And this has been happening since forever. And what has this thing done? It's gone straight down, but the media is going to talk about how amazing of an IPO it was. But guess what? It's amazing for basically no one. And it's just a huge pet peeve of mine. I had been looking forward to the Airbnb IPO for, honestly, over a year. I'm still really excited about this company. It's just a matter of pricing. I use Airbnb when I travel. I've been using Airbnb basically all year. they have become such a strong brand. I don't know if people remember when the internet was first coming around. Now we say it all the time, right? If you don't know a piece of information, well, go Google it. You don't really say go Bing it, or you don't really say go do an internet search. You use Google as a verb. Airbnb basically has a very similar brand to that. You don't say, oh, I'm gonna go Marriott my house or whatever. You know, I'm gonna Airbnb my home is what you say, or I'm gonna go, search for an Airbnb for, my upcoming trip. So I'm really excited about this company, and I'm really excited about the business model, but it just, the price that they opened it at and the valuation there is just completely insane. It's just a matter of when and where to buy it. I am pretty interested in it here in this area, these low 120s. Could they overshoot that further to the downside? Absolutely they could. I would love to see some sort of technical signal from this stock, because thus far, every time it has attempted to go, it has failed. We can look at the technicals here over the last few days. You can see there was huge selling at this 150 area on Thursday and Friday last week, basically since the IPO, right? Big selling. They could not lift this thing back above 150. And then yesterday, it kind of seemed like 130 was having the same type of selling that 150 was having. They could not get it back above. Any support level that the stock attempts to find fails, and any resistance level that the stock finds, it cannot break and hold above. So those are poor technicals right now. Even today, 130 was yesterday's resistance. 125 was that support. Right off the open, it broke down through that 125. Now that 125 starts to act as resistance. Got up there, failed, made a higher low, tried to go after it again. Actually broke through, set off a bunch of stops. This was a very fast, violent up move. I was involved trading it myself. And has once again failed to break out. So thus far, technically, even though I love the idea of the company, they opened it at an absurdly ridiculous price that benefits no one except for the big money players for the investment banks. And thus far, every support has failed and every resistance is basically held. And until that changes, you have no real technical signal to start getting involved in this and start buying it in kind of any appreciable way. And then, DoorDash was the same thing. I honestly do not remember the exact IPO price. I think it was a little bit lower than what Airbnb's was, but same thing. Opened up over 100%. Hasn't sold off, I think, quite as bad as Airbnb did. They tried to support this thing on a couple occasions, but they just opened this at such a ridiculous price. And for me, the big difference is, whereas I think Airbnb is a great company, I think that DoorDash is not a great company. They're in a space that's very competitive. They lose money, whereas Airbnb makes money. And what really differentiates a Dash from an Uber Eats or a Postmates, which I know is now owned by Uber as well, and where are the barriers to entry to getting involved? Airbnb is a global brand at this point in time. Dash, there could be, new players coming into this space on a regular basis. So Dash, I really don't like technically, fundamentally. I don't like it in any way. Airbnb, I really like the idea here. I really like the story. But the stock technically needs to show us something, because they opened it at a price that was just completely absurd and, in my opinion, is wrong. It's not right what they do to these companies. And I hope that more companies as a result just start doing direct listings, because the investment banks don't deserve the money that they're getting paid, in my opinion. So that's basically it for charts and markets for today. So with that said, let's talk a little bit about prop trading with T3 Trading Group. So T3 Trading Group is one of the largest proprietary trading firms in the United States. We have over 500 licensed professional accounts. We have offices really throughout our East Coast. I'm usually located in our Manhattan-based headquarter office. I run the trading floor there along with Scott Redler. I've been going into that office basically every day for 10 years until the pandemic hit and we shut our offices down. At some point, we hope to get them open, maybe in April. We'll see how things go with the virus. But even before the offices shut down, we had remote traders spread all throughout the country. Probably, this is an estimate, I think probably 60+% of our traders were remote traders even before we shut the offices down. Now 100% of our traders were remote with access to the virtual trading floor. All the professional traders in the company get free access to the virtual trading floor that I run. It's called the Pro Desk. I do a morning meeting every day at 9 a.m. I do an afternoon meeting at 10 after 4, and you can get access to Scott Redler's as well. So that's what we utilize for our internal communication amongst our professional traders, is the T3 Live Virtual Trading Floor. In order to become a professional trader, you do have to become licensed. So there's 2 examinations that you would need to pass: the SIE exam, Security Industry Essentials, and the Series 57, which is the Professional Proprietary Traders Examination. T3 will sponsor you for the exams. We'll provide you with study materials as well. Not interested in passing licensing exams? Well, that's fine. T3 has retail accounts available as well. So our retail accounts are very competitive with basically all the online brokerages that are out there. T3's edge in retail trading is direct market access. So what the brokers that are doing that label themselves as commission free, it's accurate that they're commission free, but they're not free. They're selling your orders out to HFT firms. Those HFT firms are legally allowed to front run your orders, resulting in you getting worser pricing. So instead of paying an upfront commission, you now are getting worser pricing on your trades, which becomes a performance drag. And honestly, that performance drag might be much more expensive to you, especially if you're an active trader, than if you were actually paying a commission to begin with. But a lot of people are not aware of that. But anyway, back to our professional accounts, they do require licensing. Once those licensing examinations are passed, we have 3 different software options available: Lightspeed, Sterling Trader Pro, and Wolverine, also known as WEX. On the retail side, we only have Sterling Trader Pro. These are all excellent professional platforms. Personally, I've been using Lightspeed for over a decade. But Lightspeed, Sterling Trader Pro, they have all of the charting capabilities you could ever want. Depth of market, market execution, level 2 access, the ability to read tape, baskets that you can build, watch lists that you can build. So these are all phenomenal professional platforms. As far as asset classes, T3 traditionally was an equity-focused firm. Over the years, we've expanded. We're into equity options. We're into futures. We have options on futures as well. If any of this interests you, reach out to me and I can speak with you about it myself, or I can put you in touch with the right person. So what should you know? So as far as joining T3 as a professional trader, we have a huge diversity of experience levels. I have some people who are working with me who are basically recent college grads, just getting their career started for the first time. They may not even know their left foot from their right foot yet as far as trading goes. I've got other people who are on my team who have decades of experience. Former fund managers, former floor traders, former pit traders. They are huge value adds to my virtual trading floor room, huge value adds to my group in the information that they provide, the trades that they're involved in that they're providing as well. So regardless of your experience level, T3 can be the right place for you. If you're a brand new trader and you don't know your left foot from your right foot yet, well, we have an extensive training program that you're going to have access to. I created it myself. It's a series of lectures, a different topic each day, starting with basics of technical analysis, basics of game planning, reward maximization, risk management, a class on probabilities, market psychology, basically a different class each day for the first month that you're here, and then you supplement that with our daily morning and afternoon meeting. So the morning meeting is primarily about idea and information sharing. The afternoon meeting is a review. It's a review of what the market did that day, but it's an educational review. What I'm trying to do very specifically in the afternoon meeting each day is draw out lessons from the market, from what the market did that day, so that everyone on the team can learn based on these more or less real-time situations on a day-by-day basis. And then every afternoon meeting ends in a Q&A. And I will sit here all night answering people's questions if it's going to help make them better traders. We can review any trader's trade. We can review big picture questions from the stuff that's basic all the way to very advanced. And by implementing all of this, training, daily meetings, strong group collaboration, it makes everybody better. From my best traders to my newest traders, everyone improves on a day-by-day basis because of the infrastructure that we have created for the development of the traders that I get to work with on a day-by-day basis. You are required to commit a capital contribution after you pass the exams to fund your account. The amount that a person wants to come in with is really, for the most part, up to them. What we're going to do on our end is we provide buying power at 20 times that contribution for day trading and 8 times that contribution for overnight positions. So, someone who joins the company with $50,000 as an example, we basically start by allocating them $1 million to work with right from the beginning. And again, we can take in people of all different experience levels and account sizes, from smaller, newer traders all the way to, if you're an experienced trader and you want to come in with $2 million because you want access to $40 million, we can probably make that work for you really without a problem. So reach out to me. Compensation works through a profit split, and that's payable on a monthly basis for our professional traders. And all the education, training, coaching, development, everything I was talking about just before, all that's done for free. There's no extra fees for that or anything like that. My #1 goal is to make the traders at T3 as successful as possible. So reach out to me. And again, all levels of experience. If you're a newer trader and you're going to be a smaller account size, reach out to me. If you're a $1 million trader, reach out to me because we can make that work for you as well. Again, here's my email address in this slide. And you're going to get a whole bunch of other stuff thrown in as well, all for free. You get my VTF room, including my daily morning and afternoon meeting. You get my training program, which isn't even listed on this slide. You get access to Scott Redler. Scott's been in the industry since the 90s. I've learned a ton from him over the course of my career. Again, when our Manhattan office is able to be open, we run it together. So you get access to his virtual trading floor room as well as mine, and you can have access to the Redler All Access newsletter that he puts together. So reach out to me. I genuinely believe that what we have to offer is better than what you can get anywhere else. So reach out to me if you're an active trader. We have an interest in working with you. We have an interest in helping take your trading to the next level. Here's my email address. Get in touch. So I guess with that said, I'm going to jump back to my trading and working with my team. So I hope everyone's having a good day. Again, it's been a less is more type of day as far as the spies go, as far as the market goes. So we'll get out there and we'll identify opportunities. And I will see everybody next week. We're approaching the end of the year. So we're getting there. It's been a fantastic year trading-wise. I know it's been a lot of difficulties for a lot of people otherwise. But trading-wise, it's been great, and we'll see what these last couple of weeks in 2020 hold for us. All right, everybody. Have a great rest of your trading day. And make sure to manage your risk because it's the key to the business.